As we head into the close of 2025, it's clear that this year has been one of the most incredible, extraordinary years for precious metals in man's history, with gold and silver now hitting new all-time highs, with platinum and palladium surging sharply as the world has gone on a global, physical precious metals buying spree, to a degree shunning the dollar, our debt and our deficits, and rejecting some of the principles of the United States as they seek safe haven alternative in one of the only other forms available to them, gold and silver, that have no counterparty risk, that are immediately liquid, and that are trusted and safe as an alternative to the dollar. Because that's what this really means. The world is looking for an alternative currency, and we're going back to the past, which has been gold and silver for most of man's 2,500 years of history, excluding the period from 1935 to now, when the world changed over to a fiat currency system. At first, the dollar was backed by gold, and then it was been backed by nothing but the full faith and credit of the United States. And now the world is saying, we're not sure we trust the full faith and credit of the United States, which is really what this run in gold in particular is all about. A lack of trust in the United States. And sadly, most Americans don't understand what's truly happening. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your needs in the physical precious metals arena, we'd love to have that opportunity. The gold market commentary that follows was taped as of the market close on Friday, December 19th, 2025. Today, it's Monday morning, December 22nd, and overnight precious metals have opened and followed through into the New York session red hot, with gold up almost $100, silver over $1.60, platinum up almost $100 an ounce, and palladium up almost $30 an ounce. I attribute this continuing surge in precious metals to the rising tension between the United States and Venezuela over the Venezuelan oil tankers. A second tanker, the Coast Guard tried to board on Saturday, and on Sunday, in a new development, the U.S. is attempting to seize a third Venezuelan oil tanker. So please keep these precious metals gains that have been rocketed higher overnight in mind as you watch the following gold market commentary. Thank you. It truly has been an extraordinary year for gold, silver, platinum, and palladium, with gold on a 12-month basis up 66%, silver now up 129%, platinum 118%, and palladium 95%. Global demand for physical precious metals exploded this year, as there's literally been a run on the bank of gold and silver, driven by debt, tariff-driven uncertainty, inflation. We saw China go on a buying spree in the spring, and then India going on a buying spree in the fall, and then the world, fear of missing out, jumping on board. And as we head into the final weeks of 2025, we've seen a big surge in precious metals in just the last month alone, as physical demand has overtaken the paper markets in price dominance this year. The physical markets are driving the price of precious metals internationally, not the paper markets, which is a sea change going back to the beginning of my career in 1980, when physical markets dominated the price at that point in time. And the world has been on a global buying spree, but U.S. buyers remain remarkably complacent. In fact, many are sellers, selling into this precious metals rally, because most don't understand why gold and silver are hitting record highs. We don't have a precious metals culture in our country like most other countries do. And looking forward into 2026, what do we see right now on the horizon? Well, we see lower interest rates, which will give gold a tailwind. It's possible we could get into an economic slowdown in the U.S. as the labor market, the employment market, which is 70% of our economy through consumer spending, is faltering. And then, of course, we're less than a year away now from midterm elections. And if President Trump doesn't have something tangible, success, to sell the electorate come next November, the chances of the Republican Party losing control of Congress are very high. And the chances of President Trump's agenda of reshoring manufacturing to the US and trying to rein in our debt and our deficits, of stalling or becoming gridlocked, is extremely high. And this could make 2026 a critical year for the United States going forward in the eyes of the world. Now, I've been fortunate in my career to have a couple of incredible mentors. Jim Blanchard was my first mentor in the 80s and into the 90s. I met Robert Kiyosaki in 2016, and we've become friends over the last 9 years. These are pictures of Robert and I from this past November at the New Orleans Investment Conference. The two pictures on the left are at a mastermind that we both belong to, the Collective Inner Circle, where we had a meeting. I was fortunate to take Robert and several other colleagues out to dinner during the conference to Commander's Palace, which is one of the New Orleans' finest restaurants. We had a wonderful evening. And the bottom right picture is another night we were getting onto the elevator in the hotel, and a gentleman came on and saw Robert and simply pulled a $20 bill out of his pocket and said, "I've been waiting years to say cash is trash." And we all busted out laughing. And that's all the guy said. It was really one of the funniest moments I've had this year. But I've been fortunate to know Robert, who has a unique take on the US, our situation, and the dollar, going back to when his rich dad told him in 1971, like Jim Blanchard understood when we went off the gold standard, that the dollar would lose purchasing power. And we're all feeling it more than ever this year, with inflation's cumulative effects coming in at about 27% over the last 4 years alone. This is something I got off of one of Robert's social media posts. I saw it the other day and it really struck a nerve with me, and I wanted to share it with you. Robert Kiyosaki on how empires die. Empires don't die suddenly. They die slowly, predictably, mathematically. That's what most people don't understand. When you're an empire, you have reserve currency status. The US has had it now for 80 years. But you lead to overextension, which leads to chronic deficits, which leads to money printing, which leads to inflation, which can lead to internal breakdown, division, distrust, debt, and decline. Sound familiar? Sadly, it rings true to me. I'm afraid that we're seeing the waning days of the US as a global leading empire. And as we go forward, we'll be challenged more and more by China and the BRICS nations. And this won't necessarily be good for the dollar. The world has lost trust in the US, which is why they're on a global precious metals buying spree. And sadly, most Americans don't understand what's really been happening, why gold and silver are hitting all-time highs. And Robert has been a champion of education and helping to explain why this all really matters. And I'm proud to know him and proud to be his friend. He said in New Orleans to me a couple times, "This is our time to shine as precious metals advocates." And he's right. And part of my job is helping you to understand what's going on in these markets. So let's get under the hood with what's been going on with gold, silver, platinum, and palladium this year. Well, first of all, this is a chart of gold price appreciation or depreciation in all major currencies going back 15 years. And as you can see, 2025 has been a record year in all currencies, led by the Indian rupee, which has lost 73% of its purchasing power to gold this year due to a loss of currency value and inflation in India. Japan, with the world's highest debt as a major developed country, is number 2 at 66%. India's at 73.6% appreciation in gold this year. And the US is second to Japan at 65.9%. But it truly has been an extraordinary year for gold price appreciation in a year when we haven't had economic upheaval in the United States. which is very unusual. It truly has been a run on the Bank of Gold globally, exclusive of the United States. Here's a one-year gold chart that shows gold's 66% gain over the last 12 months. We had a big run in the first quarter of the year, then we went sideways. China went on a buying spree. And then in the second half of the year has been more of the same, with India helping to lead precious metals higher after President Trump tariffed India. So we've got tariff turmoil hitting the two most populous nations in the country, and both nations went on a buying spree, hand over fist in India in August, September, and into October. Then we went into a correction. But over the last couple of weeks alone, we've seen gold surge just 8% since a month ago. And now we've got a double top with a rising bottom, which typically leads to a breakout. So gold is finishing 2025 extremely strong and looking strong going into 2026. Usually we get a bit of a year-end sell-off, but doesn't look like it's going to happen this year with just about 10 days to go in 2025. On a 6-month candlestick chart, you can see as we drill down a little bit, since August, gold has been on a tear. We went into that corrective phase. And now, since just about November 10th, we've moved from 4,025 to 43.75 intraday high, with gold up 8% in just the last month alone, which is a big gain on an annual basis, let alone a monthly basis. Gold is looking extremely strong heading into the new year. And silver, well, silver's been on a rocket ride. Silver has lagged gold for the first half of this year, which is fairly typical when you're in a developing bull market. Gold will lead and silver will lag. But when silver plays catch up, as I've said many, many times, silver plays catch up with a vengeance. And that's what we've seen in the second half of this year, driven primarily at first by extraordinary demand out of India. After President Trump tariffed India 50% over their buying of Russian oil, supporting Russia in their war against the Ukraine. When the Diwali festival season ended, we've gone into a bit of a correction. But over the last 2 months, silver has been on a tear again. It's up from the $47 low during the correction to now $67.20. And in just the last month alone, from that dip down to 50.01, it's up to 67.20, or 34% in just the last month alone. Silver has been on fire. And now it's due for a bit of a correction. But as we've seen in these markets over the last year, corrections tend to be short and shallow. So if we get a dip, that looks like it could be a great buying opportunity for silver. This has truly been one of the most amazing silver markets we've seen in history over the last 2 months. Let's drill down a little bit on the candlestick chart for 6 months. And as you can see, we've had a couple of incidents this year, which have truly been extraordinary on their own. The London over-the-counter market broke in October. Silver peaked at about $54.40, went into the corrective phase, started to rebound, and then the COMEX market broke when that data warehouse overheated and failed. But when the silver market reopened, after the COMEX stopped, silver popped, and it hasn't looked back since. Since that $50 bottom, we've had a run almost continually higher now to $67.20 as of the close on Friday, December 19th. And silver in the last month alone is up 34%, which is extraordinary. This has been truly amazing to watch. We could get a bit of a correction, as I said, but again, a dip would be seen by, I would see that as a buying opportunity. It's easier for me to see silver doubling from here than gold at the current levels that we're at. And the way silver has been going, with a physical structural deficit going back 5 years, where the world is consuming more silver than the mines produce, and growing industrial demand for silver through the green revolution, photovoltaic cells, EVs, etc. Silver is a byproduct of mining of other metals, so it won't be easy to create new supplies of silver as demand continues to increase while we continue to eat into existing above ground supplies. These are all extremely strong fundamentals for silver going forward. So I'm very bullish on silver. But again, when we get big gains, you could get some choppiness and get some corrections. I would look at any corrections as a buying opportunity. And in the last update, I said it looks like silver could make $70 to $75 an ounce. That doesn't seem so far off right now as we head into the close of 2025. So silver is looking extremely strong as we head into 2026. And because of silver's strong surge higher, we've seen the gold to silver ratio fall sharply over the last month alone. This chart goes back 30 years to 1995. When the gold to silver ratio is about 62.5 to 1, that's when we see gold and silver in equilibrium with relative value to each other, about equal. And right now we're just above that at about 65 to 1, with the gold price at 43.39 and silver price at 67.20. When the gold to silver ratio is 80 or higher, that means gold's more valuable relative to silver. And when it's 48 to 1 or lower, silver's more valuable relative to gold. So if new investors were to come into the market today and either wanted to add money to their portfolio or add to existing portfolios, when the ratio's at equilibrium, we would say, well, it's 50-50. Spend 50% of your available funds on silver, 50% on gold. When the ratio's been higher, towards 75 or 80 or 85 to 1, we've said, put more of your money towards silver because silver is undervalued relative to gold based on the gold to silver ratio. And that's what we've been doing this year. And that has certainly paid off well for our clients who have heeded our advice. With the ratio back to close to equilibrium or right at it, we would add precious metals to our portfolio in a 50-50 manner because of the gold to silver ratio at about 64.5 to 1 today. So that's how we use this as a tool for guiding investors and how you should look at it as well. Looking at this annual silver price performance, this has been the strongest year on record for silver in the last 15 by a long shot. With silver in India up 144%. In Japan, off to the right at 133.4%. Again, second, and the US third at 133.3%. What's kind of funny about this is with silver now hitting triple-digit gains this year, it's almost pushed Japan off of the grid as it exists on the website we grabbed this graph from, silverprice.org. But it's been a truly extraordinary run for silver in the second half of this year. And again, silver's up 34% in just about the last month alone, which would be a good year by anyone's measure, let alone a month, which has been incredible, which again is why this has been an extraordinary year for precious metals. Looking at platinum, we're seeing the same thing. Platinum's made two big runs this year, and we're in the middle of a second run right now. We did see some rotation out of gold and into platinum during the first half of this year after gold made that run from about 29.50 to 34.34, especially in the Asian markets that like platinum as a jewelry substitute for expensive gold. While I'm not sure what the fundamentals driving this strong surge in platinum in just the last couple of weeks have been, I suspect there's been a bit of a rotation back into platinum because gold has made a surge and silver's been red hot as well. The white metals are just on fire right now, with platinum up 118% this year and up 34% in the last month, like silver, and breaking $2,000 an ounce for the first time in about 10 years or more. I'd have to look back to see the last time platinum was over $2,000 an ounce, but it was certainly prior to the VW diesel scandal, which erupted in the fall of 2015, when platinum went to a discount to gold for the first time in my career, an extended period of time, and remains at a discount to gold. On a 6-month candlestick chart, you can see in the last 7 or 8 trading sessions, platinum has just absolutely been on fire, up session after session meaningfully. So it's due for correction as well. But when or if we get one or how severe it might be is anyone's guess. But there's a lot of support under these markets right now, especially going into year end, which typically you'll see a little bit of weakness as traders square up. But again, this is a different market we're in. This is not a paper-driven speculators market where the traders in New York take profits. This is a global physical run on precious metals, which is, again, why when we get corrections, they're short and shallow. And palladium's making a run too. It's made a second run this year now after being a bit more volatile than platinum through the year. Much bigger corrections and more modest gains. But again, palladium is up 95% on the year now. It's $17.49 after starting the year, right around $900 an ounce. And it's up 26% in the last month alone. So silver, platinum, and palladium have clearly been sharply bid over the last month. Let's take a look at the 6-month candlestick chart to take a look. A little bit more granularly, like platinum, it's caught a bid for the last week on a daily basis, especially once it got over resistance at 15 and a quarter. It is scarcer than platinum, but it is not a good jewelry substitute for gold like platinum is. I do think palladium is fundamentally a great value, and it could easily be the same price as platinum or higher, but it doesn't have that cachet that platinum has for jewelry reasons. Looking at the 15-month US dollar index chart, the dollar's lost over 10% this year. It's been in a channeling phase, and it looked like it was going to break out higher just a month ago when it hit that double top just under 100.50 at 100.20 on the US dollar index, but now it has rolled over again. With key support at about 97 and a quarter on the US dollar index. If we break 98, which we bounced off of, or break below 97 and a quarter, that means the dollar is going into a weaker phase, which is good for precious metals. The dollar tends to be inversely correlated to precious metals values. So when the dollar weakens, precious metals values strengthen. And there are many analysts that say we could get another leg down in the dollar next year, especially with lower interest rates or a potentially weaker U.S. economy. And if that happens, that'll just add more fuel to the rallies we've seen in gold, silver, and platinum and palladium this year. If you're interested in how to buy physical precious metals, we have a getting started guide you can access through the QR code or from our website, which I'll give you the address on in just a moment. It features the most widely traded, competitively priced, and most importantly for you, easily sellable precious metals products. It's about a 12-page booklet that you can download, which has just got very basic, sound information for first-time investors if you're interested. Here's our website where we feature those products in live, online, transparent pricing on our website. It's pretty easy to navigate. If you have any questions, you can contact us. We'd love to have you as a subscriber to our YouTube channel. I've tried for the last 2 years as we've been growing our YouTube channel to deliver to you timely, factual, and potentially actionable information that will help you navigate these precious metals markets. No hype, no conjecture, just facts. And thank you for those of you that have subscribed. Thank you for your support. Here's some of our social media information. So I wish all of you a happy, healthy, and safe holiday season and a wonderful and prosperous new year in 2026. 2025 has truly been an incredible sea change year for precious metals, driven by physical demand taking primary price discovery dominance from the speculators' paper markets, primarily the COMEX, which is something we haven't seen for 30 years. With the advent of computers, the paper markets took over the price discovery dominance for precious metals. And now we're returning to the basics, back to the past. Gold and silver have been man's favored forms of money and currency from ancient times all the way until the 1930s, when gold and silver primarily went out of currency in the world, replaced by the dollar, backed by gold in 1945. But again, we went off of the gold standard in 1971, and now the world is losing faith in the full faith and trust of the US dollar. And that's why gold and silver, and now platinum and palladium too, have been on a tear this year, as there's been a growing global rejection of the dollar and our debt and our deficit, and to a degree, our policies as well. That's what these record high gold and silver prices really mean. The world is looking for an alternative to the dollar and paper money, which is backed by political promises. They're going for what's real, what has been real for most of man's time, gold and silver. And that's what this is all about. I hope that most Americans can understand what's really happening here. We need to get our house in order. And if we don't, and we lose the world's reserve currency status, we'll have more inflation and more monetary problems than you can imagine. It won't be a pretty sight. And I fear that most Americans won't understand what's really happening until it's too late. So thank you for your time. Thank you for your loyalty and the trust that you've placed in us in the last 27 years. And again, happy holidays, and we wish you a wonderful and prosperous new year.